With us Mr. Alexander Gerding, our Managing Director, Mr. Narendranath Baliga, the CFO, and Anil Chaudhary, Manufacturing Head and Whole-Time Director. Today we will have a presentation from Alex and Naren on the financial performance of the company for the financial year ended 2023-2024 and related topics, followed by a question and answer session. All the participants are requested to note that the meeting will be recorded and the audio video recording of this meeting together with the presentation and the meeting transcript will be uploaded on the company's website and also submitted to the stock exchanges. For the smooth conduct of the meeting, all of you will be placed on mute during the presentation. During the question and answer sessions, we have received a few names of people who would like to speak, and they will be asking their questions first, and thereafter people who are online and who wish to ask some questions may please raise their hand by clicking the raise hand icon on the Microsoft Teams page. I also request all the speakers to be brief while asking the questions and queries. I request Alex and Naren to please take this forward.
Thank you very much, Manohar, and a very warm welcome. Good afternoon to all of the colleagues on the line. This is actually now my third analyst conference. I'm very happy to be here with you today. And maybe before we go to the next slides, let's just go one slide back, because it's a special month and it's a special year. And I think you saw this number, 80. So it has been 80 years since the incorporation of BASF India Limited in India. Actually, I was looking up the exact date. It was the 13th of May, 1943. So exactly 80 years ago. So it's a special day, it's a special month, it's a special year. And obviously we're looking forward to be around for more than 80 years to come. Having said that, let's proceed. So as always, we focus on matters that are in the public domain. We do not provide any business forecasts, and we also do not give guidance on future results and business outlook. Now, as always, we start with safety. So here you see a picture of our Panoli team. In August, we had global safety weeks, where we have a lot of training on safety, building awareness, and obviously this is then also translating into our safety performance. So I'm happy to share that we didn't have any high severity incidents, neither in 23 nor year to date in 2024. We also did not have any lost time injury this year. We had one process safety incident at the Dahej site in our wastewater treatment plant. There was a little bit of product overflow, but it was contained. No operator exposure and also no environmental impact. And all measures have been taken to correct. Also, what is always important for us when it comes to safety is near-miss reporting. So because this is what we call a leading indicator. So the more near-miss reporting you have, the more disciplined our teams are at the sites to actually document and highlight near misses, the less safety incidents you will have. There is a clear correlation. So our near miss reporting and discipline has really increased, and that is also translating into the very, very strong safety performance. And here I would really like to appreciate all of our sites, all of our operators at the sites for this excellent safety performance, and obviously our goal is to continue. Now, when it comes to the current macroeconomic environment, I think you all know better than me the current dynamics in India. I think I always call it momentum India. I think the momentum India continues. If you look at January to March quarter, GDP growth was even above 7%. I think the projection for the entire calendar year is in similar magnitude. We have stable inflation and interest rates. The purchasing manager index is consistently above 55, which means there's an expectation purchasing managers that the economy will continue to expand, and consumer confidence is high, remains being high. We also see that the rural demand has been developing quite positively in recent months. So overall, I think the India, with 2/3 of the GDP being domestic consumption, the momentum in India is really strong and continues to develop nicely. If you look at the different industries on the right-hand side, I think there's, we're always talking about growth mode. It's only about the magnitude of growth, which can be one year be a bit stronger and another year maybe a bit less. I mean, the automotive industry continues to develop nicely. This is a very relevant, a very important industry for BASF. So we see IHS projection for passenger vehicle growth is 4% for the year, which is positive. It's a bit lower than last year, but still on the growth side. Construction, momentum continues. If you look at infrastructure spending, I think obviously now we are in election time, but post-election period, we believe that the construction momentum will continue to increase. We've had very erratic monsoons in recent years. Last year, the monsoon was delayed, and then we also had a very, very dry August, which obviously impacted reservoir levels going into the new season. But we see now with current projections that we'll have a more normal monsoon, which I think is positive for the agricultural sector. And as we all know, 60% of the population in India is in rural India. So if agriculture does well, then also the entire economy will certainly benefit from that. So fast-moving consumer goods, be it food or non-food related, I think there is still continued to be growth, maybe a little bit less than last year, but a nice balance also between rural and urban. So we see quite some robustness also on the rural side, probably also triggered by a favorable agricultural season expectation. Now on the chemicals side, if you look at the market, I mean, there's still a lot of margin pressure here. So what we had described in previous analyst conferences, I think that situation unfortunately continues. So there's still margin pressure on the upstream chemical front. Remains to be seen how this continues. I mean, we see China GDP January, March was around 5%, so there's a little bit of rebounding. Question is how much of that is restocking effect and how much is really a fundamental sustained effect moving forward. I think this whole housing crisis in China has really dampened consumer confidence. I think people are saving more than spending. So it remains to be seen how the China situation continues. There are overcapacities, and obviously that is still impacting the chemical sector. Having said that, the question is obviously how does this context also translate to BASF numbers? And with that, I would hand over to Naren to walk us through our performance.
Thanks, Alex. Good afternoon, everyone. So like every time, I will take you through the numbers first, and then some key ratios, and then we can answer any questions that may come up in the presentation. First is the segment revenue. This is mainly to show the 6 segments that we have and which are the business units under each of the segments. Agriculture Solution is the only segment where only one business unit exists, agro. And in the rest of the segments, we have at least 2 business units performing. So on the right side, you see the pie chart where materials happens to be the biggest segment we have, followed by nutrition and care, and then industrial solution. And agro is the 4th largest segment. Yeah? Usually that question comes up from the analyst, how big is the agro business? And that's the reason here we show 14% share of the total 13,768 crores with 2,000 crore sale for the year. Now I'll go into the quarterly numbers and the full year numbers. We announced it just some time back after the board meeting. On the left, you see the quarter-on-quarter numbers. Revenue has gone up by 3%, supported by volume growth. and also prices are stabilizing. On the right, you see the PBT before exceptional item. The profit has doubled. So while the revenue has gone up by 3%, the profit has gone up more than 100%. The details of which I gave in the later slides. That is the quarter results. And on the right, we see the yearly numbers. Again, 1% increase in the total sales, so almost stable sales. But when we see profit before tax, it has gone up by 44%. And again, I'll have a quarterly breakup of this numbers in the next slides. Overall, for the full year, there's very strong volume growth, but impacted by negative price realization. So prices fell, whereas volume went up. And the input prices were kind of mixed. Yeah? For some of the businesses like agro, the input prices fell down. And for some of the other businesses, input prices went up. And on a balance, we did well. That is what the numbers show. Margins improved on account of input cost. That is what I explained now. And as you know, we announced a dividend of 15 rupees per share, which is 150% of the price of the face value. And this is, of course, recommended by the board of directors. It has to be approved by the shareholders in the AGM. So till that time, it remains in a recommendation, and then we can pay it out. Always the question comes up, especially from the analysts, how good is this 15 rupees? And why couldn't we have paid a little more, especially when we have cash? That specific question I'll answer in the later slides with the right perspective, giving you the right perspective. This is the quarterly performance. On the left, you see the sales. The light blue bars show previous financial year, 23, and the dark blue shows current financial year. December 22 was one of our very bad quarter, both from a volume and price perspective. Across the business units, upstream and downstream did not do well, and we had one of the lowest sales. And immediately later, it picked up, and as you can see, it has stabilized around 3,300 crores. And the biggest creditable performance here is the March quarter, which is not our season for agro and other businesses, but still it managed to earn that 3,300 crores, similar to last year. Yeah? So that means we don't have so much of off-season, on-season kind of quarters. Things have stabilized in a manner that every quarter we are kind of booking the sales around 3,300 crores. On the right is the profit before tax, before exceptional items. The light blue is previous year. And similar to sales, December 22, we see 18 crores profit in December 22. So kind of break-even profit that did not achieve better. Both volumes and prices impacted, and upstream and downstream, especially chemicals and materials segment, were impacted significantly. After that, we see an increase in the profit, and for the recent quarters, around 150 to 200 crores is what we are kind of registering. One thing to note for the March 24 quarter profit is it is the third best result we had for a very long time, many years. I've not seen in the last few years. Yeah, if you remember, June 2022, we had 264 crores. That's the first chart there, for first bar on the PBT side. That's the best ever we had, yeah, ever, best ever, 264. And then June 21, we had 250 crores around. Yeah, so that happens to be the second best. And March 24, 219 crores is the third best ever. Again, breaking the past, breaking the precedents, it's not just the June quarter that we are making that money. Also in March quarter, we have registered that kind of a number. And the upstream also did well in the March quarter. And overall, when we see the business development, segment business development, you realize across the board we have done well. Net working capital development, the dark blue here shows accounts receivable, dark blue bar on the top. The light blue is inventory, and the gray at the bottom is accounts payable. So the net working capital is the addition of accounts receivable, inventory, reduced by accounts payable. And that is shown by the golden line at the top. Around 1,000 crores of net working capital. And though the company has been growing, you have seen the sales going up significantly from around 9,500 crores to 13,600 crores. still the net working capital is maintained at the same level or even better. Yeah, this is one of the best net working capital situation we had. On the inventory side, very careful management by the business units has ensured that despite all the disruptions that we are facing in Red Sea and other places, they have maintained the inventory levels at a good level, which I'll show in the later slides, around 70 days of inventory. And when it comes to receivables, again, very good discipline by the business units in collecting the money that is due. And on an average, we keep around 10% overdues. Yeah, that's the limit. We don't allow the overdues beyond that 10%. Yes, the business units go and collect the money from the customers. So with that discipline, we have maintained the working capital, receivables and inventory. At the same time, the point to note is how when the inventory goes up, we also ensure that the accounts payable also goes up. So the inventory is kind of financed by the suppliers, not by BASF always. Yeah? So net, we keep the net working capital at a good level. Yeah? The accounts payable has also increased so that our total requirement is lower. One other point I wanted to highlight is how in the June quarter of last year, the total net working capital increased to around 1,600 crores. And similarly, earlier also, you can see 1,400 crores net working capital. And when the question comes up, why you want to hold cash, this is one of the reasons. Yeah, at some point of time, we might need in another one quarter, we might need another 600, 800 crores for working capital. So it would be a shame to kind of distribute the money now and go back to a borrowing stage when we have such a good ROCE possible in the company. So that is one of the reasons. If there are any specific questions, I can answer that later. But that is one of the reasons why we tend to keep some cash with us and not distribute everything in the form of a dividend. And to the question whether that is maintained for ICD purpose, intercorporate deposit to the sister companies, yeah, whether that is the intention, that is exactly never the intention to keep cash. Cash is maintained for our own requirement. And we just have deployed in the best possible manner, either in a fixed deposit or as a ICD. The intention to keep cash is not just to lend it as ICD. Yeah, we will need this use, we will need this cash, and we will use it going forward. Coming to the next slide, this is the revenue by segments. The leftmost bar shows last year's sales, 13,645 crores, and the right side is 13,768 is the current year revenue. And in between, you see the pluses and minus. Green shows increase over last year, and the red shows decrease over last year. In industry, agriculture solutions, over and above the 1,800 crores that we had earned last year, and now another 200 crores. So around 2,000 crores the business unit has reached. So very credible performance by the agriculture division. Materials again did extremely well. Last year was good, and on that they have built significantly. For industrial solutions, both our dispersions and performance chemicals suffered. This is still the top line, so keep this in mind when we go to the next slide. Industrial solution is down, both by dispersions and performance chemicals. And surface technology and nutrition care did well, whereas chemicals, again, it's upstream. Both petrochemicals and intermediates fell significantly. Though last year we had 2,000 crores, this year it is 1,700 crores, 17% down. So this is the top line. So keep this in mind when we go to the next slide, where it shows the EBIT. Suddenly you see both industrial solutions and chemicals positive. Yeah, it's on the positive side, whereas nutrition and care, where the health and nutrition division did not do well, is the reason why we have a lower profit. It's not a loss actually. Last year we had 100 crores of profit. This year it is 36 crores. Yeah, and we have care chemicals and health and nutrition businesses in nutrition and care. So this is the revenue, and that's the result. And coming to some of the key ratios, receivable days I already talked about. Very good discipline by the business units in managing the receivables at a reasonable price. Generally, we have 60, 70 days of kind of payment terms and 65 days receivable with around 10% as overdue is a very respectable number to have. Good discipline there. Inventory also, as you know, we import approximately 80% of our purchases, and hence it takes 4 to 6 weeks to import the material from any of our global plants, whether it could be Antwerp, it could be Germany, it could be Korea or China. So still 70 days of inventory, again, well managed by the business units. At the same time, we also want to ensure that any opportunity coming from the customers are met. And hence, we cannot go down to base minimum where you may not even be able to serve the customer. So that's the reason why a decent amount of the inventory is managed. Cash flow against 500 crores last year, 800 crores we have earned. This is from operations. And then we have paid dividend last year, and the balance amount we have kept in ICDs, intercorporate deposits to the group companies. And that is, again, one of the reasons I was saying why we need to keep some cash. We need it for working capital. We're needing it for CapEx. At that time, we don't want to go out and borrow the money. And hence, we are retaining it. The intention is for internal use and not for intercorporate deposits. Operating expenses are 7.8%, slightly lower than last year. Again, very good performance on the fixed cost management. EBIT before exceptional items, 5.6%, ROCE 26%. Again, one of the best I have seen in the last few years in BASF. Yeah, ROCE for the full year at 26%, and that is one of the reasons why we are maintaining the working capital the way we are managed. RONA is return on net assets, 29%. That is basically removing the impact of the cash that we are holding and the interest earned on that. So purely on the operational assets, how much we have earned, 29%. So if you remove the cash surplus around 1,100 crores plus, and if you remove the interest earned on that, just by operating assets, we have 29% RONA, return on net assets. And EPS, again, 130 rupees. Last year it was 90, and if we see financial year 22, it is 137. So that happens to be the best ever. This is not still the best ever. The financial year 22, where the first 6 months was the best ever we had, 137 rupees. And financial year 21 also was around 130 rupees, but in that time we had sold our construction chemical business, and that profit was also included there. So this happens to be the second best EPS that we have earning per share. With that, I look forward to the questions, and for the time being, I hand it over to Alex for further updates.
Thank you, Naren, and I think big congratulations to all the businesses, and also Naren, to you and the team for keeping our working capital under control. I think we've always said that our focus is profitable, sustainable growth, and I think this is visible quarter on quarter. And while at the same time keeping a tight control on our working capital, which is also visible. So big appreciation to the entire team in India, all the businesses, but also the service units, and obviously also the production sites. Now, before we go into Q&A, just a few additional updates, like every time, just to give you a flavor of. I mean, this is not all encompassing. I mean, there's certainly more updates that we could give, but just a few examples. First one, we just recently launched a new insecticide. This is a new mode of action. Insecticides is actually almost 50% of the entire crop protection market. Yeah, and we've historically not been a big player in this segment. You know that we had launched Exponers a while back. In the meantime, it has really become a blockbuster product, and now we're launching Efficon, which is a new mode of action, sort of complementing our Exponers product, and we're really gaining traction and gaining market share in this very, very critical segment, which is insecticides. We've also recently expanded our E-coat manufacturing facility. E-coat, after metal treatment, E-coat is sort of the base layer that you have to put on cars for corrosion protection, and we really significantly expanded our capacity here, supporting all of the OEM customers in India, be it Maruti Suzuki, Tata, Mahindra. So I think a very, very important investment and expansion. Now, this is a little bit of a little bit early, because next week we're actually going to have the inauguration, so I'm a little bit ahead of time. But this is a picture from a few days back of the construction of our technical development center for polyurethane foams, and we're going to inaugurate this next week here, actually in Navi Mumbai at our Thane site. So really looking forward to this. Now, our dispersion business, which is a very critical business in India. As you know, we have production both in our two multi-OD sites, Mangalore, but also in Dahej. In Dahej, as you might remember, middle of 2022, we had a second line of dispersions. That line is already full. Yeah, so we're now thinking about debottlenecking that line. So that's also a testament that we made the right investment, and it enabled us and the team actually to gain market share, especially in the northern part of India and western part of India. So a real strong asset utilization, and now even thinking about debottlenecking. On top of that, as you know, sustainability is a very, very important element. We just received Red Cert 2 certification for low PCF dispersions, water-based dispersions. So we have the capability, we're future ready, so to say, to produce at both Dahej and Mangalore low product carbon footprint dispersions, as long as there is a willingness to pay, obviously, by our customers, yeah, which is certainly something that needs to continue to develop. But we're future ready here on this side as well, with the example of our dispersion capabilities. On the sustainability front, we've also signed this purchasing power agreement where we're going to move from 60% of our electricity usage in Mangalore being green to 90%. So this will allow us to be almost fully on renewable power at our very important Mangalore site. Diversity and inclusion is very, very important for us. And in Dahej, we recently inaugurated a crèche, yeah, where 10 young children can be accommodated. Yeah, and this will allow parents to really be able to have the kids close by. And I think this is something that is important. I think we're one of the first chemical companies to do this in Dahej, and really proud. Obviously, we continue connecting with the industry and associations. It's just a picture of the Indian Chemical Council, where we participated in the panel. We also participated at Chemtech here. Now, on the diversity and inclusion side, I think this is a project which I find very, very important. Our diversity ratio is still not where it should be. I mean, we have 11% across the entire country of female colleagues. Yeah, in production units, the percentage is even a bit lower. Now, this percentage has increased over the last few years, so we have improved, but it's still not where we would like it to be. And one element to really improve the pipeline coming in is to really make the chemical industry more attractive to female talents. Yeah. And here we have cooperated with the Indian Chemical Council and Somaya University to upskill bachelors and masters of science of chemistry coming from underprivileged backgrounds, females, yeah, that have gone through some training. They also visited a chemical site because we have to make the chemical industry more attractive. Yes. And these 40 students recently graduated. Some of these students now are doing an internship at BASF, but also in other companies, and we hope that other peers will join forces here as well to increase the female talent pipeline coming into the industry. Same on the automotive refinish side. So we launched a project together with a very, very important OEM customer, Mahindra, to also promote female talents in the automotive coating refinishing business. Now, as part of CSR initiative, I mentioned that we've had very, very dry states, right? And water availability during agricultural season is extremely important. So here we're also supporting in very dry areas of the state. This is in Maharashtra, to expand and deepen the reservoirs. So once it rains, more water can be captured, and that can be deployed then for agricultural uses during the season. So this is also something where we are supporting key areas that are of need. Our Kids Lab, we launched, or we relaunched. I mean, this is not something new, but we launched it for the first time as a CSR initiative, where we are inspiring young kids from underprivileged backgrounds to become climate champions. And this we started actually last year with 330 kids in Mumbai. And then we moved to Mangalore. 1,900 kids went through Kids Lab in Mangalore. A really great job done by the teams down there. Now we're going to Bangalore and eventually also to Delhi. And I think by the end of this year, we would like more than 3,000 kids to have passed through our Kids Lab. Also to attract the future generations to chemistry. Now, very important, we continue to engage obviously with our customers. As I mentioned, the automotive industry is a very critical industry for us. Here you see Maruti Suzuki, which is almost 40% market share in India. So it's a leading OEM, a very important customer. And we had a tech day where we brought our experts. Here, one of our colleagues is showing the coatings products to the Maruti Suzuki team. And we're making inroads really with OEM customers and conducting these tech days together with, in this case, Maruti and Suzuki. And then I think this is the last slide. We also had an appreciation dinner, as you know, we bid farewell to two independent board members, that had been in the board for quite some time. Very, very important contributions also to the board. So we're very, very appreciative and thankful for everything they have done for BASF India Limited, and we welcome two new incoming independent board members. So that was definitely a very special moment. And with that, I would like to close and with our continued focus area. So one, we have to maintain the India momentum, capture every business opportunity possible with sustained profitable growth, as we have been demonstrating also in the recent quarters. Staying close to our customers will be critical to achieve that. At the same time, we have to continue to maintain prudent cost control and working capital control and optimize our asset utilization. We have to continue to drive sustainability. We are a thought and action leader in this space. We have to continue to do that and obviously ensure safe and efficient operations, maintain our safety track record, and continue to focus on diversity and inclusion and our employees. So these are the continued focus areas. And with that, I would really like to thank my colleagues here and now really looking forward to your questions.
Thanks, Alex. Thanks, Naren, for a very insightful presentation on the financial performance, but also other activities that the company is into. I have a few speakers who have already registered, and I would start with naming the first one, but I also encourage our people online to, if they have any question, they can pose it in the chat, or they can also raise their hand and ask the question. So both the options are available. Please take full opportunity of that. So we go with the first speaker is Archit Joshi from B&K Securities.
Hi, sir.
Archit, yes.
Yes, sir. Am I audible?
Yes, very much. Please go ahead.
Great. Good evening, gentlemen, and thanks a lot for taking my question, and congrats for a very stellar quarter and a very strong FY24. Sir, I have two questions. Firstly, on the agrochemical solutions business, I think in a much depressed financial year that we saw in India, especially in the domestic market with uh, sporadic spells of rainfall and the fact that we are still worked with quite a lot of channel inventory. What was the key driver for growth in FY24? Have there been a few products that you would like to highlight which gained market share in a depressed scenario? And also, if you could speak of the new product launch that you showed earlier of Epicon, I believe, correct me if I'm wrong, that's a patented molecule of our parent and the group companies. And what is the potential that you see of this molecule and any further launches that you're planning in this space? Thank you.
Okay, Archie, thank you for your questions. So I think as I had mentioned a little bit on the slide, when it comes to the agrochemical business, I think the team has really done a fantastic job, in recent years, and continues to focus first, really focus on profitability. And connected to that, also expanding, launching innovations and expanding our portfolio. And as I mentioned, 50% of the market is insecticides. We historically have been strong on the herbicide and fungicide front, but now with Exponas launch first, which has become a blockbuster in the meantime, and with Epicon as a second very prospective insecticide, I think we're really growing our market share in insecticides, and that's enabling us to be more resilient overall by having a more complete portfolio now. And considering that we usually have always been very cautious to push inventory into the channel too early, right? Especially considering in recent years very erratic monsoons, we placed our product more closer to application timing, also allowing us to shift the products to the right places in the country where it is needed, based on disease pressure or weed pressure, or in this case also insect pressure. So that has allowed us really to be able to react nicely and not to sit with too much channel inventory. So that's one thing that the team has done very nicely as well. So and considering now that the expectation, at least, obviously I don't make any future predictions here, but the expectations is that we will have a more normal monsoon coming up. I think that's quite positive, and we can really carry that momentum that the team has been having into the season. And so big kudos to the teams here. Now specifically on Epicon, I mean, this is a sucking and piercing insecticide with the focus crops being cotton and selected vegetables. And the pests that we're talking about is aphids, jassids, and whiteflies. And this is complementing Exponas, which was more a chewing pest insecticide, where thrips is more the focus. So it's not cannibalizing, but it's rather complementing our Exponas product. And I'm very confident that the team is really having the right focus areas to also continue to develop very nicely.
Sir, thanks for the clarification. I've just got another one. The question has been asked you quite a many times before. Has there been any change in stance from the parent towards the Indian entity with respect to any strategic growth plans with respect to capex? Anything that you can share, or any particular area for growth that we are targeting by some investments, especially in our manufacturing outfit that we have in the Dahej or in any other sites across BASF Group in India? Thank you. That was my last question. Thanks.
Thank you. So yes, I mean, we have been continuing to invest. I mean, I mentioned just as an example in the presentation our dispersion line 2 that we had started in mid of 2022, and that in the meantime is also very well utilized, and where we're even thinking now, the team is thinking about a debottlenecking for next year. So that is just one example. I mean, also on the engineering plastics, we continue to invest into that business. I mentioned the E-Coat E-code investment that we did in Mangalore, that will enable us also to increase capacity and make inroads also with our OEM automotive customers. So in a nutshell, I mean, we continue to invest in India, in our assets, not only in Dahej, but also in Mangalore, also in Panoli, as I mentioned, engineering plastics. So this will allow us to increase our capabilities and our capacities and cater to the growing demand in the country. And I think these incremental investments will certainly continue to happen. Yeah.
Thanks, Archit. I had a related question around that from another analyst, and before we go to the next one, there is differentiated steering for AP that was being announced last year, and the question was, how do you see the progress in terms of differentially steering this business from the parent?
Yeah, I mean, differentiated steering, I think, is something that has become more and more relevant as some of our businesses, and if you look at the agricultural solutions business, I mean, we are competing against pure play companies, right? So companies that are only active or primarily active in the ag space. Yeah, if you think about Syngenta, if you think about Bayer Crop Science, if you think about UPL, FMC, Corteva, I mean, I can go further down the list. Yeah. Being part of a big family like BASF is, on the one hand side, very good because you have the financial backing, you have economies of scale, synergies that you can also gain from services that we can deploy into the different businesses. But at the same time, we need to recognize that the business, to be agile, to be fast, to be competitive and remain competitive, it needs to be steered differently, considering that we have a competitive landscape which is more pure plays. Yeah, so the intention here is to enable the agricultural solutions business to actually gain in speed, gain in decision making, empowerment, and become ultimately also more competitive and more profitable. So it's actually a good thing, while still being part of an integrated company like BASF, yeah, benefiting from the financial backing and also centers of expertise when it comes to services. So I think this is the mindset. Yeah, it's about simplification, it's about empowerment and differentiation to ultimately be even more competitive. And this is what we are discussing in the company on how to achieve that even more than what we have already accomplished so far.
Thanks, Alex. We go to the next speaker is Rohit Nagraj from Centrum Broking.
Yeah, hi. Thanks for the opportunity and congrats on good set of numbers. First question is again on the agrochemical side. Now, if you look at our EBIT performance for last year, out of the 230 crores of differential from FY23 to 24, almost 205 crores has been supported or contributed by agrochemicals. So what has been the main factor out here? And an allied question to that is, in terms of the inventory management, how are we doing that in agrochem, given that it's completely merchandise business and we need to have lead time to keep the inventory just in time, selling before the application? Thank you.
Okay, thank you for those questions. Maybe I start with the last one first. So obviously we're also increasingly considering the Make in India concept also for our agrochemical business. So a lot of the final formulations are already formulated within the country. Yeah, so that is already one element that will continue to intensify also in years to come. So that's one element that allows us to cater to the growing local demand and be as flexible as we can be. As far as the development of the business, I think there's multiple elements that have contributed positively to this performance. Yeah, one is, as I mentioned, launches of new products like Exponas, which has become a blockbuster in the meantime. Entering into this was all incremental, so there was no substitution, no cannibalization whatsoever, because we were not playing in the insecticide space. So it was all incremental business. We're tapping into the insecticide market and gaining market share. And Ethicon will only continue that momentum. Yeah, so that's certainly one element of why the performance has been very strong. The second element is the team has done really a fantastic job to focus on steering the product mix beyond innovations that I just mentioned, steering the existing product mix to a more profitable mix. Yeah, even having to shift maybe some products out of the portfolio that had very, very low margin. Yeah, so a very, very focused approach on profitability, and connected to that also some price increases that we have made, which has also contributed to the profitability. Yeah, so I think there's multiple elements, innovations, a product mix steering based on profitability, and also price increases that have allowed the agricultural solutions business to develop quite nicely. And connected to that, a very, very tight and strong relationships to our channel partners. I mean, we have 150 million farmers in India, 150,000 retailers, and around 50,000 wholesalers. It's very, very important that we have a very, very close relationship to our key retail partners, and I think the Ag team does a fantastic job to keep that proximity and intimacy to the key channel partners.
Sure. Thanks for the elaborate answer. So second question is in terms of capex or investment that was done in FY24. So which and all segments have we done capex, and if you could just let us know how has been the capacity utilization across these segments, just to understand whether we have leeway in terms of growth whenever the demand comes back to normalcy. Thank you.
Yeah, I mean, I would, and please jump in if you see, that we can add some. So, I mean, I think we have a track record of really being very successful in capacity utilization. Yeah, so once we put the investments up, I think the teams and the businesses do a fantastic job to utilize those assets and fill them as fast as possible. And then obviously we do then incremental steps like debottlenecking or adding more lines. Yeah, this I think the track record here has been very successful. I mean, we cater to the demand not only through local capacities but also through imports, right? So we have assets also within the region. We have assets in North America, in Europe, so we can always deploy and bring the proper solutions to the country that are needed to cater to the demand. Having said that, obviously it is our intention, and I think we have been also driving that to increase our local footprint in light of also making India a self-reliant India. Yeah, so we are capable and confident that we can continue to cater to the ongoing and growing demand in India with the assets that we have. And I mean, we don't disclose usually capacity utilization numbers on individual sites or even individual assets, but I can tell you that our asset utilization is recognized and is good, and we really have a track record of sweating our assets, and then also being proactive then to initiate capacity expansions.
So Rohit, on a overall basis, it's around 80 to 85% capacity utilization across the plants. And last year, financial year 24, we had around 100 crores of capex, mostly a maintenance capex, which means no increase in capacity. It is to maintain the existing assets. The last expansion was for the dispersions, where we increased it by 45 KT in the second half of 2022. So that is financial year 23. So last year we did not have any capacity expansion.
Sure. And my last question is in terms of excluding agrochemicals for the other 5 segments, how have we seen recovery over the last 4 quarters, and whether we have seen similar competition from China across these segments? So maybe your broader thoughts on the same. Thank you.
Yeah, I mean, thank you for that question. And as mentioned before, we always talk about upstream and downstream, right? And I think I would say maybe in a very simplistic view that last year we had a very positive development of the downstream. I mean, agro is just one example, right? But dispersions, for example, the coatings business, the automotive coatings business, even nutrition and care. I mean, the downstream was probably more resilient, connected also to the demographic in India. I mean, the demographic dividend and the consumption patterns in the country, and 2/3 of the GDP being domestic consumption. I think that was really a driving factor. Whereas the upstream businesses, when it comes to chemicals and materials, I mean, those were challenged, and challenged. What we see now, and you see that in the last, in the fourth fiscal year quarter, or the first calendar year quarter of this year, Jan to March, that material segment, which we regard as upstream, has improved. I mean, we see input cost improving, but the pricing pressure is still on. So the margins have improved in the material segment, which is quite visible. But the chemical segment, for example, which would be intermediates and petrochemicals, is still heavily under margin pressure. I mean, the pricing pressure is still on. This is commoditized business, and as I mentioned in the beginning, I mean, we need a strong Chinese consumption to kick in again, to reduce also a little bit this dumping into India, from overcapacities that have been built and continue to be built in China. And there has been some uptick there. It remains to be seen how sustainable that consumption in China will continue to develop, because that will certainly also influence the pressures that we will continue to see on the upstream chemical business. So to make a long story short, I think the downstream businesses have been performing quite nicely, and we see that will continue with this momentum in India. The upstream businesses, material segment, we see an improvement recently, but the pricing pressure is still on, and especially still on the chemicals business. It's difficult for me to make a prediction here, but we continue to ensure that we keep our assets running, that we grow our volumes in the country connected to the momentum in India. And obviously we also hope that the margin improvement eventually will also kick in the chemical side once the Chinese demand becomes more sustainable and continues to grow.
Thanks for answering all the questions, and all the best, sir. Thank you.
Thank you.
Thank you, Rohit. I would also encourage people online to raise their hand or ask a question in the chat, so that you can take opportunity of this meeting. Before we go to the next one, there is one more question on the electrification in the automotive segment and the potential opportunity for BASF to participate in the value chain, like especially in the battery materials or the semiconductor segment. How do you see this from a BASF perspective, and where do we stand there?
Yes, I think that's a very important. I mean, the automotive industry, as mentioned in the beginning, is a very important industry for us. We have very strong relationships to all OEM players, in the automotive space. We have also a team, we call it Team Automotive India, which is actually run and led by Anil, to really make sure that we also create synergies, between the different businesses that cater to this industry, and that we focus also on our OEM customers here to bring new solutions. Having said that, obviously electrification is the future, but at the same time we have to say that the penetration in India, I mean, there's a lot of talk around it, there's a lot of development in that space, but the actual penetration is still quite low. I mean, if you think about electric two-wheelers, I think we're talking about 5% of all two-wheelers are electric. If you think about four-wheelers, I think it's 2%, around 2%. So obviously there's very strong targets, there's strong ambitions also by the government here. And obviously we are part of those discussions. We are connected to all of our OEM partners, not only on the four-wheeler front, but even on the two-wheeler front. We're having very active discussions here. And BASF will also certainly participate in this space once it really takes off. Yeah, and but the penetration is still very low. Yeah.
Sure. We go to the next speaker. That's Miss Jayashree Ramesh. Are you there online? Are you able to hear us, Ms. Jayashree Ramesh? Okay, maybe we'll come back. So, there's one another question, especially on the pricing pressure in the monomers and the performance material segment. And how do you see that situation now in the current fiscal?
Maybe I start, and Anil, if you want to complement, please feel free to do so. I mean, as I mentioned before, I think the materials segment, if you look at the last quarter results, you clearly see an improvement on the bottom line, on the margins, yeah, which is very good. Nonetheless, it is primarily driven by reduced input costs. It's not driven by an improvement on the pricing side, on the top line pricing side. Now, we hope that the pressure on the pricing is stabilizing more, but we still see pressure there. Yeah, so I would say that dynamic of pricing pressure is still there. But maybe Anil, you can.
I think you covered well, Alex. If you see the demand for monomers and especially polyurethanes, polyamides from the key sectors like automotive, furniture, construction, footwear, that remains pretty solid. And I think overall for this year, the demand will be strong. As you rightly said, in terms of the price levels, though it has stabilized, so we don't see much decline as we saw in the previous quarters, but it has stabilized at a lower level. And we still see that there is a margin and price pressure, especially from materials coming from China and Middle East. So I think that seems to be continuing for some time.
Yeah. Thanks, Anil.
Thanks. Do we have Jayashree Ramesh? Are you there? I think there's a question in the chat. Yes. The other question which is also coming in, and this is from the chat, is how do you see the volume growth in the agrochemical segment in Q4 2024 and in FY 2024? How do you see the volume growth? I mean, of course, this has already been addressed, but maybe you want to add a little bit more on that. How do you see this from the new segments or the new products that have been launched in the?
I mean, I see it positively, as already mentioned. I mean, we don't give forward-looking statements, so we have to really see how the monsoon season really plays out. I think expectations and projections, especially when it comes to precipitation, are on the positive side, which should be better than maybe last year, where it was very dry and delayed. So obviously we're looking forward that materializes. It remains to be seen. But that is certainly a sentiment that is adding to a positive sentiment. I think the team, as mentioned before, has focused on really expanding the portfolio, having a more balanced portfolio, herbicides, insecticides, fungicides, and also being present in all key areas in the country, and having very close ties to our wholesalers and to our retailers, and ultimately our final customers, the farmers. So I think the performance has been great. the expectations on the monsoon are positive, and we hope we can continue to carry that performance moving forward. But again, remains to be seen how it develops in the next few months, and also how the competitive landscape continues to develop.
Sure. Thanks, Alex. One another question which also came in was in the surfactants and the care chemicals segment, which is part of the nutrition and care, and one of the points which was highlighted was that the profitability is always volatile and margins are quite low. So how do you see this, how the sustainability can be kept for performance of this particular segment?
Yeah, I think, the fundamentals for this business is very strong. You have the human dividend in India, 1.4 billion people. Also this shift from rural India to urban India, the consumption shift that goes attached to that, be it detergents, laundry, soaps, personal care products, lotions, etc. So I think the fundamentals in India are strong. Obviously, you then have to look into specific product groups, and here you have more specialty products, which obviously we tend to be stronger on, which are also higher margin, and then you have more the commoditized products, and then we also on some of these products depend on imports. Yeah, so if there is any disruption, be it in the Red Sea, which could cause delays in shipments, that can obviously also impact. If there's any disruptions on our big assets that we have, be it our vitamin A plant, be it our citral value chain, that can also influence the developments here. So it's a little bit of a difficult thing to just add in one sentence, but I think the fundamentals are strong. The focus of those businesses on India is strong. I think with the aroma business, when it comes to menthol, we've had a very, very positive and strong track record. When it comes to vitamin A has been under a lot of pressure. The prices have really come down last year, and I think we've seen that impact as well. When it comes to ibuprofen in the pharma space, I think that's a very critical AI as well that continues to develop. And then when it comes to the care chemical side, UV filters is an important aspect. Optical brightening agents is an important aspect for our laundry detergent business. And then the oleochemicals, which goes into soaps and detergents, shampoos, and lotions as well. Yeah, and I think it's a little bit also a product mix. So what we see now, most recently, the oleochemicals are from a volume perspective developing nicely, but that's not the highest margin product group. Yeah, so we also have to make sure that the UV filters, that the optical brightening products continue to develop nicely, and there we unfortunately also depend on imports. And if there's disruptions, we feel it. Yeah.
Thanks. We will once again try for Ms. Jayashree Ramesh. Are you able to speak now? Okay. So maybe if you have any questions or anyone would like to ask a question in the chat, please feel to do so. We once again have Rohit Nagraj, who has some additional questions. So maybe Rohit, go ahead.
Yeah, just one question on the polyurethane development center or lab. So will this be primarily dedicated for applications pertaining to Indian area, or will it be a global development center or lab? Thank you.
So do you want to take it?
Yeah, so primarily this will be for the Indian customers, because customer base is growing, and we see a lot of need from Indian customers for this kind of application center. So primarily we'll execute most of the Indian projects in this application center to start with.
Sure. Thank you.
Thanks.
Thank you, Rohit.
Okay, we don't have any further questions, Alex. And of course, for Ms. Jayashree Ramesh, you can ask your question if you are still there, or maybe you can also send us your questions and we can look into that at a later point in time. Yeah.
Okay, so with that, I would really like to thank you all for joining us this afternoon. Again, coming back to the start of the presentation, 80 years of resilience in India, you know, we look forward to continue on that journey. And also thank you all for your interest and support. And look forward already to the next analyst conference. Big appreciation and thank you to the BASF team in India for these very strong results. And you know, our focus continues in the direction of sustainable growth. So looking forward to the next time. Thank you.
Thanks. Thank you, everyone.